Hey guys, it's Dwayne the Trader, also known as Mr. Whiskey Rain, and today we got a little video going into explaining the difference of investments. So we have day trading, if you all guys know what that is, versus swing trading, the forex currency market. And so we're basically gonna break down the decision what's better, day trading or swing trading. And today we're gonna break down the pros and cons and what I believe you guys should be doing, especially for beginner traders, to trade the forex market. So let's go ahead and hop into this presentation. Let's get started. So definition of day trading is to take a position in a currency pair looking to close the trade or trades in the same day. Matter of fact, even minutes to hours from opening the position. Also including, day trading, you have to trade the markets around certain times of the day. You might have to trade the markets around the Euro session, the pound, the London session, or the US session, or the London session. Depending on your strategy, you have to trade those markets around those times because not all markets move all the same with the same amount of volatility around the same time of day. So you have to take that into consideration when coming to day trading the forex market. You have to decide whether you want to trade the London session or you want to trade the US session, or if you want to trade the London session. The Asian session. Definition of swing trading is to take positions in a currency pair looking to hold typically more than 2 days or up to 2 weeks at a time for a single currency pair. Maybe even longer, really, depending on your strategy and how you really want to swing trade that pair. But most trades last up to around 2 days, up to around 2 weeks. Those are the typical times for swing trading forex currency pairs. And you don't have to wake up at a certain time, like 3 a.m. Eastern time for the London session, or 8 a.m. Eastern time for the US session, or be awake at 7 p.m., 8 p.m. for the Asian session. The pros of day trading: the ability to make money within minutes to hours. It builds this euphoria in our brains, the fact that we can make money within minutes to hours, that we can make a whole week's worth within minutes to hours and not really do anything. That brings the euphoria, the excitement into day trading. And also not allowing huge pip swings into your trading account. You're going to have tight stop losses. You're going to have 5 pip stop losses, 10, 20 pip, 30 pip stop losses. And I wouldn't even really say 20 to 30. Usually day traders only really have 5 to maybe 15 pips, maybe 20 pips. A stop loss really depends. Really depends. You're not having a huge pip swing into your trading account. But let's get into the cons of day trading. 90% of forex retail day traders lose money. You find a lot of your pip to stop loss ratios extremely small, which, that's like I was saying, that's like 5 pips, 10 pips, 15 pips. That's not enough room usually in the forex market to have such a, because the forex market could fluctuate up and down a lot, and you might be right about your decision, you might be right about your trade, but 15 pips just wasn't enough breathing space for it. You have a lot of commissions or charges added on to your broker account. What you see when you're trading, you see commissions, and you see charges, you see swaps. Those are all different type of interest and fees that can add up onto your account from day trading. Usually you're taking larger position sizes because you have smaller stops. You're, for example, if you have a 1,000, or let's just say a $10,000 account, and you risk 1%, yes, that's $100. Yes, that's 1%. But if your stops is 10 pips, and that's 1%. You're saying, for this small 10 pip stop loss, I want to risk $100, and so you have to increase your position size to make that happen. You don't really, and then also you don't really have time to adjust to the market. You know, you don't know what type of news or what type of volatility is going to bring into the markets that day. It's always different type of things that can affect the volatility in the market. So you don't really have time as a day trader to adjust to that. You have to be ready. You have to be on the charts. You have to be ready. You have to be very focused. You always have to be glued to the screen looking for opportunities at all times during those sessions, just because, for example, the pound dollar, the GBP USD may not be moving at 4 in the morning, but the Euro USD is. Or if the Euro USD is not moving, it may be the pound Swiss franc or the pound yen or the Euro CAD. It doesn't really matter. You know, you always have to, you got to be able to look at the screen. You got to be glued to the screen looking for day trading opportunities. The pros of swing trading: you have a larger pip to stop loss ratio, allowing trades to breathe. So what I mean in, like, you know, if you're a swing trader, you might have 100 pip stop loss, and that's more than enough room to allow your strategy to be right. Allowing that enough room to breathe, because it trades might pull up 30 pips against you and then turn around and go in your direction. Versus day trading, you kind of need to be right when you enter. Most of the time, you need to be right. You're not allowing a lot of breathing room. You're saying at this area, I bet is going to go down. You might give a 5 pip stop loss just in case it wants to be wrong, but you're basically saying, I'm right at this market. I want to be right here. I want to be short right here, or I want to buy right here, and it's going to be right here. That's what you're basically saying. With 100 pip stop loss, you're like, okay, I could be wrong, and I'm gonna allow 100 pips, which is a lot in the forex market, to move against you, to allow the trade to work in your favor. So you have a lot more breathing room. You can actually make smarter adjustments with your trades. Understand what the market is really telling you when you have a larger pip to stop loss ratio. You're able to set alerts of areas in the markets you're looking for entries. You could do the same thing with day trading, but like I said, you know, day trading, you're day trading that area. And so if you have an alert set and you're going and you got to load up your charts, you got to load up your computer and everything, you have to be ready to take that trade right there and then. And sometimes you might have connection issues, broker issues, whatever issues might happen, and you might miss out on those trades. When swing trading, as long as you're in that zone of that area that you like, you're going to get in that trade, and you're allowing, you know, you could be 10 pips off. It doesn't really matter. You could be 20 pips off. It doesn't really matter, because you're a swing trader. You're allowing that position to breathe. You can allow the trend to work you can allow the trend to work with you instead of against you. And what I mean by that, let's just say you're in a downtrend on the euro dollar and you want to take a sell trade. Great. Well, with a 10 pip stop loss, even though you were technically right on the trend going down, with a 10 pip stop loss, it took it out. It went up 10 pips and then it eventually ended up going down. Versus having 100 pip stop loss and riding that wave down, you was able to actually continue that trend, because there is no such thing as a perfect entry in the markets. We do have them, but there is no such thing as perfect entries all the time. And so when you might take this zone, it might break your zone for a quick second, a fake breakout, and then pull back down. But because your stops were so tight, you got stopped out and didn't get to catch that trade downwards, and you may have to re-enter. So now you took another loss, and now you have to re-enter, which is more commission charges, which is more swap fees if you're holding all different type of, you know, interest on your account that's just adding up over time that you are paying the broker. You don't have to be glued to the screen. I've been so free being able to trade like this, setting trades, walking throughout the day, doing things that I want to do without having to be glued to the screen, because I'm not looking for every single opportunity. I got alerts set, and when those alerts hits, I pull up my computer, I look at if I want to get into it, and if I do, I set the trades, and then I close my computer and I walk away and I let the trades play out. You have smarter risk management with swing trading. Like I said, you have you're not using as large of a position size. For example, you know, with a 10 pip stop loss and you're risking $100, that may be a standard lot. But if you have 100 pip stop loss and your 1% is $100, that could be a micro lot. So you're able to use less leverage with your broker, and that equals to smarter risk management. And then you also have less commissions, and you can earn interest on your positions for holding it for several days. So those are the pros of swing trading. The cons of swing trading is not too many, but there is cons. It requires patience and time, as things may take time to go in your favor. It may take weeks, it may take days to weeks to see profit at a time, and trades can go in your favor and then turn against you. And those are the cons of swing trading. As in day trading, trades, if you end up being right, more than likely you're going to take that profit and not allow trades to go against you. But as in a swing trader, you're allowing things to breathe. You're allowing the flow of the markets to happen. So you might allow trades to come back against you. If they're like 30 pips in profit, you might allow it to come back depending on your strategy and depending on how the charts are looking. So those are the cons of swing trading. So what should new traders look to get into? And so this is what I believe. I believe it would be best and the most safe decision for new traders to the forex market to swing trade the forex market, as day trading the markets can be very difficult and lead to unwanted emotions, making bad decisions such as revenge trading or doubling down on your positions, and can leave a bad taste for this industry. It's not, you could go all over YouTube and you could find all different type of gurus and all different type of scams about the forex market, because people have bad taste about the industry because they lost money. But but it's just because they didn't have a good strategy or smart risk management, and that is usually the problem. Those two, well, and your psychology. So three. So it would be a psychology problem, your risk management problem, and you don't have a good strategy. Those three combined usually lead to why 90% of retail traders lose money. So the difference of risk management for both day trading and swing trading. So day trading risk management on a losing streak. So let's just say when day trading, you're looking to take a trade basically every day. That's what you're day trading. So you're basically looking to take for that week. You're looking to take a trade every single day. So let's just say you have a bad week, and usually day traders just don't take one day trade. They usually take 2 to 3 day trades a day. So let's just say you lose 2 day trades and you have smart risk management and you're only risking 1%. At the end of the week, if you're losing 1% on a trade and you losing both trades a day, and you just have a bad week where nothing works out, you've lost 10% of your account. And how do you think your emotions will be if you lost 10% of your account in 1 week? Versus swing trading, your risk management, let's just say you take a couple positions a week, looking to hold for to a week to up to a month, and you lose 10% of your account in that month. I promise you'll have better control over your emotions than losing 10% in a week. Because let's say you even have a bad week, let's say you have a bad month, right? You still only lost 10%. But let's just say you have a bad month day trading, you have now lost 40% of your account. If you was to let's just throw worst case scenario and lose every single trade, you take 5 trades a week and you lost all 5 trades for the next 4 weeks, you have lost 40% of your account in 1 month. Versus swing trading, you've only lost 10% of that account in 1 month. And so where do you think your emotions will be with 10% in 1 month swing trading versus 40% in 1 month day trading? So I hope this video helps you guys out understand what's the difference and what's the difference in day trading and swing trading. And I hope I can sway your decision in making new traders understand that yes, you can make money day trading, and yes, you can make money swing trading. But please understand, it is a lot harder to day trade the forex market than swing trading the forex market. And I'm telling you this coming from 6 years of trading the forex market. I'm telling you, day trading is so much harder than swing trading, so much more stressful than swing trading. I wish that you guys will make the best decision going into your future and your investments, because it's your money on the line. At the end of the day, it's your money, and I can't tell you to do with your money. Same like you can't tell me to do with my money. But all I could do is give you, you know, safer advice going into something that I already know about. So, all right, guys, this is pretty much the end of the video. My name's Dwayne the Trader, also known as Mr. Whiskey Wayne. Go ahead and follow my Telegram. Follow my Telegram here. Let me pull it up real quick. Follow my Telegram channel where I give out all my strategies for swing trading. Not strategies, but all my, all my trades that I'm getting into for swing trading that you guys can get into. Link is down in the description. And if you're watching this video on the day that it drops, I am doing two $50 giveaways, which will be announced tomorrow on Wednesday for people who follow my YouTube, subscribe to my YouTube, and follow my Instagram, Mr. Whiskey Wayne, and DM me showing me proof that you follow my YouTube and follow my Instagram, and you'll be entered into the contest to win. But all right, guys, like I said, my name is Dwayne the Trader, and I'm out.